The U.S. Commerce Department is hiking anti-dumping duties on Canadian softwood lumber to 20.56%.
Now, 1/3 of the lumber used in U.S. home building comes from Canada. Drywall, or it's called gypsum, is largely made in China and Mexico, so you'll see prices go up there too. A builder industry trade group representing the big public builders said the tariffs will increase the cost of a new home anywhere from $7,500 to $10,000 per home. Now, the chief economist at Realtor.com today said that the entire market, including existing homes.
Breaking news from the housing market. In just weeks, the cost of building a single home in America has shot up by nearly $19,000. Why? Because Canada has slashed its lumber exports, and U.S. tariffs are choking off the supply. Builders are halting projects, home sales are collapsing, and families are being locked out of the market. What is sold as economic strength is now pushing America into its worst housing shock in years. It all started with tariffs meant to protect American lumber. In March 2025, the U.S. Commerce Department sharply raised anti-dumping duties on Canadian softwood lumber from 7.66% to 20.56%, pushing total combined tariffs above 30%. Builders felt the pain fast. The NAHB Wells Fargo Housing Market Index survey said recent tariff moves added about $10,900, and some estimates went as high as $18,600 per new home. Prices for framing lumber surged 25% since May, according to industry data, limiting supply and spiking costs. Lumber firms felt margin squeeze too. Weyerhaeuser's Q2 2025 net profit plunged from $173 million to just $87 million, a nearly 50% drop. They told investors in official filings that tariffs created material risk across the supply chain. Rather than flood the U.S., Canadian sawmills began redirecting shipments to Asia to avoid tariffs, according to the BC Lumber Trade Council. Within weeks, American construction slowed, permits fell, developers paused, and building costs spiraled out of control. What was intended as leverage instead became a self-inflicted blow to U.S. housing. The housing market felt the tariff shock faster than anyone expected. Within weeks, the U.S. Census Bureau reported the sharpest drop in new home sales in 3 years, with unsold inventories rising to around 511,000 units, the highest level since October 2007. Developers who had already broken ground froze construction, leaving half-built homes standing like empty shells. Builders warned that framing costs became unpredictable, making contracts impossible. According to the National Association of Home Builders, tariffs had already added $19,000 to the average price of a new single-family home, pricing thousands of first-time buyers out of the market. Mortgage lenders sounded alarms as rising home prices collided with near 7% mortgage rates, creating what Barclays analysts called a staggering situation, given strong consumer demand. Instead of protecting jobs, tariffs triggered layoffs in construction. Small builders in timber-heavy states like Indiana and Alabama shelved projects altogether. In major cities, buyers walked away from signing deals when costs jumped overnight. Lumber volatility didn't just raise prices, it created panic in a market built on stability. The policy meant to show strength has instead triggered America's biggest housing slowdown in years. Canada responded quietly but powerfully. Instead of retaliating with rhetoric, they strategically cut exports to the U.S. and redirected lumber to new markets. Within days of tariffs jumping over 30%, Canadian sawmills began sending contracts to China and South Korea. British Columbia Premier David Eby proposed voluntary export quotas to ease tension, saying Canada was open to discussing fixed limits on softwood lumber exports. Industry groups like the BC Lumber Trade Council called U.S. tariffs unjustified, punitive, and destabilizing, warning they would accelerate Canada's move toward diversification. Canada accelerated its pivot, developing new export rail corridors in Saskatchewan, and expanding sales in Taiwan and ASEAN nations. Ottawa also ramped up talks with Latin America and ASEAN trade partners to spread risk beyond its U.S. reliance. The strategy was clear. Canada would not play the victim. They'd find new buyers fast. This wasn't just mere retaliation, it was a calculated shift showing that Canada's lumber industry is global and resilient. For Washington, it meant the tariffs didn't weaken Canada. They forced it to hang up and move on with global reach. When Canadian lumber slowed to a trickle, U.S. builders found themselves scrambling with no reliable backup. Southern yellow pine mills in the South were already operating at capacity, leaving no spare volume to meet demand. Eastern hardwoods simply couldn't substitute for Canadian softwood, and wildfires had already cut timber yields across the West. Builders were forced into fierce bidding wars for limited supplies. Some tried switching to steel beams, hybrid concrete, or engineered bamboo, not out of preference, but because those materials were more price-stable under chaotic conditions. Smaller contractors in states like Indiana and Alabama had to cancel projects mid-construction. Major home builders such as Lennar and D.R. Horton publicly revised guidance downward, citing commodity unpredictability and tariff-driven supply risk. Homeowners faced longer builds and rising costs daily. For U.S. builders, the scramble wasn't innovation, it was desperation. There were no materials on the market capable of filling the void left by Canadian softwood. In simple terms, without Canada's lumber, America's housing industry was running on fumes. In Washington, leaders hailed the lumber tariffs as a bold act to protect American jobs and show negotiating power. But when it comes to Canada, Canadian-built vehicles still face higher import duties than Japanese cars, even though many Canadian models contain 40 to 50% U.S. parts, while Japanese ones contain none. This wasn't economics, it was political theater. Builders, developers, and even Republican senators from timber-heavy states publicly warned that the tariffs were harming local industries instead of supporting them. Yet the White House insisted tariffs provided leverage, but leverage only works when negotiations happen. Canada Pension Plan Investment Board continued backing U.S. infrastructure and data center projects, quietly reminding Washington who really had capital power in hand. The contradiction was sharp. While the administration touted America first, capital quietly flowed elsewhere, and domestic builders were bleeding. Political theater made headlines, but the real outcome was empty job sites, rising home prices, and stalled developments. Tariffs became showmanship. The audience, the American people, paid the price. But the lumber fight was only one part of the story. Behind the headlines, Canadian capital was quietly pulling away from the United States. The Canada Pension Plan Investment Board, managing over Canadian $714.4 billion, around US $530 billion as of March 2025, began reducing its exposure to U.S. real estate, citing growing political and regulatory risks in filings released that spring. What had once been a pillar of long-term U.S. investment was now flagged as unpredictable. At the same time, Ontario Teachers' Pension Plan, with more than Canadian $250 billion in assets, began shifting funds away from U.S. commercial property into safer and cheaper markets across Europe and Asia. Analysts describe the U.S. market as a zone of volatility, no longer the safe harbor it once was. Meanwhile, Canadian funds as a group were diversifying aggressively. They expanded positions in infrastructure, renewables, and logistics across Asia, Europe, and Latin America, signaling they no longer relied on the U.S. to drive returns. Leaked internal memos warned that Washington's policy swings had become a direct threat to long-term capital safety. It wasn't just Canadian dollars moving. South Korea's sovereign wealth funds directed billions toward Canadian REITs and infrastructure plays in early 2025, choosing predictability over turbulence. Similarly, German infrastructure consortiums launched major bids in Vancouver and Toronto instead of U.S. cities, citing better policy stability. The result? Global money wasn't retreating, it was rerouting. Canada was gaining new partnerships. The U.S. was losing its reputation as the world's safest harbor for investment. Wall Street had long been the magnet of global finance, but by mid-2025, cracks were appearing. What started as a lumber tariff fight had gone down into a crisis of confidence, one where capital didn't just slow down, it packed up and quietly moved elsewhere. Where money leaves without warning, the signs are clear, even if Washington isn't yet listening. By mid-2025, the data was impossible to ignore. American builders were paying record prices for materials, especially lumber. New home sales plunged 13.7% in May 2025, the steepest drop in nearly 3 years, pushing unsold inventory to levels not seen since 2007. Housing starts also fell sharply. Single-family home building dropped 4.6% in June, hitting an 11-month low. Builder sentiment cratered. The NAHB Wells Fargo Index slid to 32 in June, its lowest reading in 2.5 years, as 37% of builders offered price cuts to lure buyers. Homeowners were also squeezed by nearly 7% mortgage rates, which were driven in part by tariff-fueled inflation pressures. Analysts from Moody's called the tariffs a self-inflicted wound on the U.S. economy, warning that elevated costs and sluggish starts were dragging growth. Canadian officials responded by pointing out that their exports hadn't collapsed, they simply shifted toward Europe, Asia, and Latin America, where demand remained strong. In the end, green builders paid the price. Tariffs meant to protect American jobs had inflated costs, stalled projects, and scared away investors. The United States had become the most expensive place on earth to build a home, and it was a title no one wanted. The U.S. thought tariffs would bring leverage, but instead they brought higher prices, stalled projects, and collapsing home sales. Subscribe for more breaking insights, share this video with others, and drop a comment. How do you see this trade war ending?